Alright traders, welcome back to this quick video which I'm going to explain to people a little bit of a gem that people can take in their trading, an ICT gem, right? So this is gold on the 15-minute time frame. So if we just play price on, right, we're going to be understanding a few things about time and liquidity, right? Let's understand this, right? So from here, price again starts off by engineering liquidity. Now this is the Asian range, right? The Asian range, again, this is what we call the ICT accumulation. And the ICT accumulation essentially builds liquidity, right? So everything here is about liquidity. Now, there's two main points about this liquidity pool that we need to focus on, right? There's two points that have our attention, right? We have the Asian high up here. So let's label that in red. So we have the Asian high up here, and we have the Asian low down here. So if we just play price on, let's see what happens, right? So notice how we see price coming lower and sweeping the Asian range low, right? So we see a sweep of liquidity just down here. Now, what does this Asian liquidity sweep actually tell us? Now, you need to understand that from a timing perspective, this is now the London session, right? Or the Frankfurt session. So we see volatility kick in the markets, right? So we see volatility kick in to sweep liquidity. This is the liquidity sweep, right? And you want to ask yourself, what is the purpose of this liquidity sweep? Well, this liquidity sweep itself entices early sellers, right? Because think about it, right? The people who don't know how to trade, or the uninformed, when you have a liquidity pool like this, when we sweep lower, it's enticing early sellers into the market in this region. Now, those early sellers have their stop loss probably in and around this area, the Asian range high. Now, from here, we can play price on and see what we get even further, right? We range in London, and then eventually what we see is we see how price comes up and sweeps the Asian range high. So notice how we have a sweep of the Asian range high just over here. Now, this is what we call our manipulation phase 2, or simply put, our Judas swing, right? This is our Judas swing. Now, what makes a Judas swing or a turtle swoop or simply manipulation? Well, it's the high of the day, right? HOTD, right? High of the day. And you want to look for your high of the day typically above the Asian session range, so ASR. Above the Asian session range, it's swept the Asian range high. So this is the Asian range high over here. ARH, Asian range high. And once we've seen that, what we're now looking for is we're looking for a shift or a break in the market structure, right? So notice how we have, this is how I'm looking at my structure currently. So we have a structural low down here. Then we have a structural high. Then we have a structural low down here, followed by another high. And now from here, we see the shift of market structure, or we see the break in market structure. It's very simple, right? We're looking for a break with a body. So if we just rewind price back a little bit further, we can understand that, yes, we swept the Asian range the Asian range high. And we need to understand that this is not a break of structure. And the reason for that is because, again, the bodies tell us the story, not the wicks. The bodies tell us the story. Okay, so we want to see a body break, right? This is the previous low over here. So this is the low. And we want to see price break with a body. That's the most important thing to understand. So let's play price on bar by bar, right? So have we seen a break with the body? No. No. Now we see a break with the body, right? So we've seen a clear structural break with this body, right? And now from here, we have two fair value gaps, one up here and one down here. Now, the way that I trade, I'm a little bit more conservative, so I prefer to have slightly wider stop losses. From here now, I would be happy to place a sell trade just over here, stop loss above the Judas swing. And you want to target from here, where's our target going to be? Well, our target is going to be down here. Notice how we have fair value gaps to target over here. We have some inefficiencies here. We have some inefficiencies over here. So this is where you want to be targeting, right? You want to be targeting this inefficiency down here. So this is the overall trade idea or the trade thesis. I believe this is a 1 to 1.5, or if you had your stop loss a little bit higher, it'll be a bit more. But again, this trade has potential to come down all the way essentially to this Asian range low down here. So this Asian range low, again, we understand just from our previous example above, when you have an Asian range low that gets swept and you have an Asian range high that gets swept, right? From here, the thing to now understand is that you want to be targeting Asian liquidity, right? Notice how we have Asian liquidity down here. This is now 1 to 2.5 hour trade, right? Just understanding the basics of liquidity and timing. So if we continue to play price on, yes, we see how price just misses our entry over here. And this becomes very interesting. So again, we have our Asian session range, right? We notice how price comes in to our entry. So we tap into our entry during the Asian session range, going into the Frankfurt and the London session. But now that we have an Asian range over here, let's notice what price does again, right? Notice how price eventually comes up. So we see how price eventually comes, sweeps the Asian range again. So notice how we have the same manipulation of price. Use the Asian range to your advantage, right? We see a sweep of the Asian range high, just like over here, right? Sweep of the Asian range high. Now from here, once we have our entry in place, fair value get from the day before, if we continue to play price on, we see eventually we do get, after quite a few hours actually, price does eventually go on to not only, I believe, hit our target or is just about to hit our target, right? So understanding the basics of liquidity and timing over here, right? So now we're currently in this position over here. But the main thing I need people to understand is the idea of using the Asian range liquidity to set up potential traps, right? Notice how we have the fair value get filled over here and we have the fair value get filled over here. But the main thing to understand is having your manipulation again above the Asian range high. Look to sell after the Asian range high has been swept, right? Over here, over here. Now there was a potential re-entry if you didn't catch this entry, right? Understand again we have an Asian range high over here and we had a fair value gap just over here to target, right? So again, what did New York session do? New York swept the high of London or the high of New York, opening New York. Stop loss above the Asian range high. And again, we had a 1 to 4, 1 to 3 hour trade over here, right? So this is another re-entry that I wasn't particularly looking at. I'm still in this trade over here. But again, this is a quick overview as to how you can use the Asian range to your advantage.